No.
Good afternoon, distinguished ladies and gentlemen, and a very warm welcome to you all, and thank you very much for taking time out of your busy afternoon to join us today. My name is Oyinda Akinyemi. I'm an executive director with Stanbic IBTC Capital, and I'll be the moderator for this afternoon's webinar. This is the second in a two-day series of webinars hosted by Stanbic IBTC Bank. This afternoon's session is focused on the topic fintech penetration as a catalyst for infrastructure investment. And we're delighted to be joined by two technology professionals, and I trust that it will be an exciting and insightful session this afternoon. At this time, I'd like to introduce the Executive Director, Client Solutions, Stanbic IBTC Bank, Bumi Dayo Olagunju, to introduce the panelists.
Thank you very much, Oyinda. Good afternoon once again, ladies and gentlemen, and welcome indeed to this session on technology as we deliberate on fintech penetration as a catalyst for infrastructure investment.
I'll send the spec. It's basically...
Before I introduce our panelists, I'll just give us a little background on the landscape. As we know, technology has changed, or some will say revolutionized, the way we live and work. We saw it especially over the course of the last 2 years as it shaped the world further. Today, you can say that most, if not all, industries have in one way or the other been transformed by digital capabilities, which technology has enabled. There are various technologies, some of which I'm sure our speakers will touch on today, which have also disrupted ecosystems or traditional value chains as we knew it previously. These changes from adoption of these technologies would continue, as the world goes further. And to our minds, it's not a question of whether these technologies will be adopted. It's more of how they will be used in order to meet customer expectations today. The impact of technology in financial services is also very broad and has also deepened over the course of the last few years. Looking at some of the information or data from sources such as Elfina or Tech Cabal, you would see that over the last 9 months or the first 9 months of 2021, African fintechs in particular, have been able to raise billions in funding, and this has, shown a shift where increasingly investors are having appetite towards the growing fintech space in Africa, in Nigeria. If you narrow down to Nigerian fintechs and even what they've raised over 2021 year, data puts it at about 800 million. If I compare this to the last previous years, it's in multiples of almost twice or 3 times, what had been raised previously. Just to show again that, there's increasing investor appetite to invest in technologies, fintechs, growing this space, and they are serving multiple industries today. So there are indeed existing opportunities, massive ones. Again, looking at a fintech report by McKinsey in 2020, it's cited that despite the successes we've seen in financial technology within Nigeria, there's still about 60 million Nigerians who do not have a bank account, or who remain underserved. And financial inclusion, driving objectives or targets to ensure coverage also presents a lot of opportunities, whether we're looking at payments, lending, remittances, insurance, just name it. Opportunities abound. So we'll spend some quality time today interacting with our expert speakers. We have two speakers, as Oyinda mentioned. The Chief Executive Officer of YDFS MTN Nigeria, Mr. Usoro. We're really glad to have him on the call with us today, talking about this topic. Mr. Usoro's background, I will talk to briefly, just so we can appreciate the level of experience, exposure, and some of what he'll be sharing with us today. He is the Chief Executive of Yellow Digital Financial Services, which is a fintech subsidiary of MTN Nigeria. Mr. Usoro is an expert in payments, retail banking, distribution, and he's got over 2 decades of experience developing and managing payments and financial services products across banking, telecommunications, and beyond. He's led many innovative payment products, technology, product management, both locally as well as internationally. So we're really very pleased to have him with us today. Our second speaker, Mr. Wole Abu, is the Chief Executive for Liquid Intelligent Technologies Nigeria and its data center in Nigeria. Mr. Abu's got over 14 years experience in the telecoms industry. And before joining Liquid Intelligent Technologies, Mr. Abu was the CEO of Pan-African Towers Limited. He was also the Vice President of Sales at Airtel Nigeria. Of course, he's handled many roles across various segments and industries, and we're really very happy to have him here today talking about this topic. So, Mr. Usoro, Mr. Abu, welcome. The session will be moderated by Oyinda Akiemi, who is the Executive Director for Stanbic IBTC Capital Limited. Thank you and welcome to everyone on the call. Oyinda, back to you.
Thank you very much, Bumi. Now, just in terms of housekeeping, the panelists will each give a presentation of their introductory remarks concerning the topic, after which we will delve into discussions, Q&A. All participants are going to be muted for the duration of the webinar. And so if you have a question or a comment, kindly make use of the Q&A tab. So let's get right into it as I hand the floor over to Mr. Usoro for his presentation. Mr. Usoro, over to you.
Thank you, Oyinda. In this day and age, we're always looking for the mute button. Thanks for having me. I'll just go through a couple of slides just to talk through my view, or generally our view of how we see the market. I think Bumi has rightly pointed out that there's been very increased interest in fintech in Nigeria and generally in Africa. And that's rightly so. There's almost no better time to be in fintech across the value chain. And that has seen a lot of capital, a lot of funding come into Africa, with Nigeria obviously ranked as one of the biggest areas where, or one of the biggest countries where capital has come into. I think that's been spoken about very extensively. The outlook is that we expect that this should continue in our opinion, in the short and the medium term. We expect that there should be continuous or increasing interest in fintech in Nigeria and in Africa. But when we look at the segment, and I think it's important because fintech is really very, very broad. And even when we try to segment it, this is still a very broad segmentation of how we see fintech, whether it's in payment, mobile money and digital banking, or in lending, or in saving, investment and crowdfunding, or in enterprise services and infrastructure, to a limited extent cryptocurrency, and of course in short tech. Across all of these segments, reality remains that there is still very huge opportunity. A lot of these segments are still very underpenetrated. If we look at, the stats in Nigeria, a lot has been said about those stats. The fact that we have an addressable market of adults in excess of about 100 million. Those 100 million, maybe only about 40 million of them are currently banked. But the way we look at it is beyond the underbanked market, and a lot has been said about the underbanked, there's still a huge segment of Nigerians that are underserved. The way I'd like to put the context is that Nigeria has a lot of stuff. We've over time developed a lot of sophisticated financial service products, and maybe that's why we also lead when it comes to attracting fintech investment. They're great companies doing great things and have developed quite an array of sophisticated financial service products. Where Nigeria is lacking is in the depth and the adoption of all of those services. And that's why, in spite of the number of fintech companies we have and the interest that we have and the interest that has been shown in that area, there's still a huge segment of Nigerians estimated at about 45–50% that are unbanked and underbanked. And even when you look at the segment of Nigerians that are served, a huge percentage of them are underserved, depending on the kind of products or services. So yes, we're able to send and receive money and do so in a manner that most countries have not been able to achieve. Transfers from bank to bank is possible in Nigeria and also instant. I was explaining to a colleague a while ago in South Africa about the concept of instant transfer across banks. And it almost took me time for them to really understand what I was talking about. They almost kept on, the sense was, okay, well, we understand that you do the transfer, but is it instant? Is it T+1, T+2? And these things Nigerians take for granted, the fact that we can actually send money and people receive it instantly. But the question is, if we look at the addressable market of people that ought to be able to send and receive money, it's about 100 million people, and only about 40 million people, if we go by the number of BVN today, are able to do that. So there's still a huge number of people, as much as we could consider something as basic as P2P across networks, interoperability across banks, as something that Nigeria has been one of the countries that has led. We're still lacking when it comes to the number of people that can adopt it. And the same thing goes for even the more advanced services. Lending penetration is still very, very limited in almost single digit. Insurance also maybe in single digit. And the same goes for so many other products and services. So, and there lies for us, and I think for everybody in fintech, that's where the opportunity lies. And that's why I believe that both in the short to medium term, and I dare say the long term, there should be a lot more increasing interest in fintech, because there's still huge opportunity for people to transform the market. And beyond transforming, cash still remains king. I mean, not just in Nigeria, not just in Africa, but for most parts of the world. And with the fact that we now have leapfrog technology with the presence of the high adoption of mobile phones, we can innovate out of the card rails. Traditionally, whether it's North America and Europe, have made great strides building their card rails. Not just the fact that a lot of people have their cards or have their plastics, but there's a wide acceptance network that's already been built around cards. For Nigeria and the rest of Africa, we should be able to leapfrog the more expensive and the traditional card rails and innovate around mobile, especially when we recognize the fact that mobile penetration is almost at 70 to 80% in most countries. So that gives us an opportunity for us to be able to leapfrog and potentially transform our traditional cash payment. We said cash is still king. Predominantly, 90–95% of transactions are still cash based, and there is huge opportunity for us to be able to transform that. If we see countries, and for me, the leaders when it comes to mobile financial payments, as much as a lot has been said about Africa, a lot has been said around the likes of Kenya that has led in Africa, but they've done a lot of things around P2P, digitizing cash and transforming mobile payment in the trade and in retail is still a huge place where Africa can actually transform. And for us, if we look at the picture of success, what should success look like? Across the various verticals, whether it's in payment, how do we digitize? Firstly, how do we ensure broad access to financial services, either through a bank account, either through a wallet-based system, or through a savings account? Ultimately, every adult Nigerian or every adult African should be able to have access, basic access to a wallet service where they can carry out basic depository and withdrawal services. That's at the very basic. But that is the platform, or that's the basis that we can innovate. That's the basis that we can offer a lot more financial services once everybody is included, whether it's from offering payment services, whether it's offering credit services, whether it's offering insurance services. But that's for us is the basic that we're able to drive that. If we're able to, and in the question, and it was now speaking to topic, is how do we ensure that we can from there use that as a catalyst to drive infrastructure development. The kind of infrastructure that I see us drive or create as financial services goes beyond physical infrastructure. Is the digital rails that we're building, is the financial service rails that we're building that would enable broad access to financial services for things as basic as remittance. And remittance for me is across Africa, not just in Nigeria, but across Africa and beyond is huge. We all know, and a lot has been said around how much inflows comes into African countries. In Nigeria, almost in excess of 17–18 billion. But there's a lot more that we can do around building the digital infrastructure that would enable remittances to happen even more seamlessly. Across Africa, and the classic example I always use is the same way it is difficult for travel to happen within Africa. It is easier to travel from Nigeria to other parts of the world than to travel within Africa. That's the same challenge that we have with payment. Within Africa, making payment from one African country to the other, cross-border remittances, cross-border payment, it's almost as difficult. These rails need to be built. This infrastructure needs to be built to ensure that trade can happen seamlessly, not just within Nigeria, but across African borders. And when we look at this, if this infrastructure is properly built, the gains are enormous. It's interesting to note that if you look at the SDGs, as much as 8 of the Sustainable Development Goals, as much as 8 of the 17 of them have financial inclusion targets embedded in it, whether it's the eradication of poverty. And we can see direct correlation why we can eradicate poverty. There's some stats that have said that once you achieve or able to achieve considerable level of financial inclusion, you should be able to increase your GDP by at least 20 basis points. And that, I mean, traditionally, or should impact the level of poverty in countries. There's the SDG goal on ending hunger, achieving food security, and promoting sustainable agriculture. In countries like India, part of what they've been able to do with financial services and agriculture, where you see the linkages, that unlike countries like Nigeria, where agricultural inputs like fertilizer is still distributed almost in a manual format. We're actually distributing fertilizers to farmers, and that leaves room for inefficiencies to arise within the system. In countries like India, they've been able to link financial services directly to agriculture, and how they've done that is by distributing subsidies directly as funds into the wallets of farmers. And so what you find is, if you're entitled to 12 bags of cement, 12 bags of fertilizer, and the government intends to subsidize 25% of the cost, you get your subsidy credited into your wallet directly. And that brings about a lot more efficiency. So you already can start seeing some of the ways and some of the linkages of financial services to agriculture. The same thing with health and well-being, or if we extend the conversation to gender equality and economic empowerment. Part of what we have seen, even in the distribution of our own services, is one of the people that are most excluded are obviously women in financial services. And while there's been deliberate attempt, both by us and I believe a lot of other financial institutions, to see how women can be included, that we achieve more inclusion of women in financial services, because we all know the stats. The fact that once a woman is included, there is direct impact on the quality of lives of the family and by extension the community. The same thing goes for promoting economic growth and jobs. There is huge opportunity that fintech can bring in job creation. A good example, and that's even a more recent one, is what we've seen with agent banking. It is estimated that as many as 300 to 400,000 people today are directly or indirectly employed through agencies, through agent financial services in the country today. There are so many other verticals that can be unlocked that would support job creation and economic growth once we're able to fully unlock the full value chain of financial services. Same thing goes for supporting industry, innovation, and infrastructure, and of course, broadly in reducing inequality. Speaking of reducing inequality, the Gini coefficient in Nigeria is still estimated at about 80%. There is the widening gap or the increasing gap between those that have and those that don't. And part of the way that we can bridge this, obviously, is by ensuring that people have basic access to financial services and to the verticals or to the complementary services that financial services can offer. We've seen in countries where people have basic access to microloans, that it's also being a catalyst, not just for economic growth, but for jobs and employment. There are classic cases of people who their sense of microloans is, I take, whether it's 20,000, 25,000 in the morning. If I'm a cab driver, if I'm an Okada driver, I'm able to use that to fund my business in the morning, and I pay back by evening or the following day, and commence that cycle again. The number of people today that are out of jobs or are unable to be part of profitable or productive economic activity because they don't have access to basic loans, we can actually address that problem. So for me, that's the broad way that we can impact the economy through financial services. And again, it's not just about, for me, it goes beyond the hard infrastructure to the broad digital infrastructure that we can build to enable economic growth. I mean, lastly, it's some of the imperatives that we see is for us to make this happen and for us to continue to see and drive growth in financial services, we need to solve some broad problems. The issue of digital identity, which has been somewhat a front burner for government, as a means to maybe address some of the insecurity issues in the country is also very important for fintech. Developing the central credit infrastructure that would allow institutions, various institutions, to have real-time or clear visibility of credit status of people. Whereas the number of credit bureaus exist in the country, we need to enrich the data that is going into those credit bureaus that would enable people to take better real-time credit decisions. Talent is also something that is very, very big and something that is a major concern for everybody. More and more we see, I don't know of many the fintech companies in Nigeria today that is not somewhat feeling the pinch of the need for talent. The fact that talent has become very mobile in today's world, and people could choose which jurisdiction or which country they will choose to work in, and not necessarily the country of their birth. So that mobility in talent obviously is creating a lot of pinch for most people, not just in fintech, but in technology broadly. And we need to continuously and very importantly ensure that the regulatory framework and the regulatory environment that would ensure and spur innovation is there for all players. Ultimately, if we're able to put all of this in place, we should see a lot more businesses, not just business models, but also businesses that will drive the future of fintech in Nigeria. We should see more digitization, particularly of cash, and of course, the direct impact to jobs. All of this put together, I believe, is the recipe that we need to start to drive and create the infrastructure, and I always would qualify the digital infrastructure that we need for Nigeria and for Africa. That's my presentation. I would hand back to Oyinda.
Wow, thank you so much, Mr. Usoro. That was an extremely comprehensive presentation, giving us the layland of the fintech space in Nigeria for starters, and the opportunities that exist in the various subsectors. Also pointing out to the fact that when we talk about global development in general, it can't be achieved without financial inclusion and definitely the participation of fintech companies. We'll delve deeply into some of the issues that you have highlighted here when we get over into the Q&A session. So at this time, I'm just going to hand the floor over to Mr. Wale Abu for his own introductory remarks on the subject. Mr. Abu.
Thank you, Oyinda. I'm really glad to be part of this discussion. By listening to my brother Soro really break down the fintech industry, and I just want to take off on the back of a couple of things he's mentioned, and to also enlighten the audience on the underpinning technologies that are driving fintech. Because ultimately, when you're talking about fintech from the consumer perspective, you're just looking at a service or an application, and it's sitting on top of several things. Remember that this infrastructure, the digital infrastructure that delivers this type of application and code is driven by certain technologies, policies, etc. I think that's where I would like to start from, since Soro has dealt very well with the application and fintech space itself. So just to step back, what are the technology drivers, the big technology drivers in the world now? You're talking about blockchain, IoT, cybersecurity, cloud, and artificial intelligence. So these are the big tech trends, the mega trends, so to speak, that's changing the world, that's turning the world into what we call the fourth industrial revolution now. Everybody's jumping aboard. It is spawning big industries. You have people like Amazon, Facebook, Microsoft, and all the tech giants, you know, who dominate this space. And one of the things that we're seeing here is that they're also beginning to now look at Africa differently. Before they now, typically we had just maybe the MNOs and OEMs playing in this area. The OTTs have always been there, but now we're seeing them deploy infrastructure to connect Africa. So I'll just break into the next leg, which is, if you look at the landscape, what I'll call the telecom infrastructure framework, as we all know in Nigeria, you have the MNOs who are the most popular, you know. So you have the MNOs, people like MTN, Airtel, and Co. They all play in this space. Then you have the towercos, ATC, IHS, etc. Then you've got the infracos, others who own data centers, fiber, ISPs, and Co, who sit in that framework. I'm just trying to round up how large, you know, this whole thing are. And of course, these three, they have something in common. They are regulated by the NCC. However, they work very closely because you can't deliver technology without power. So you've got increasing what I won't call them power codes, for want of a better word. And these are people that supply all the renewable energy, diesel generators, rectifiers, and all the infrastructure required, of course, with the grid, the discos and the gencos that powers the telecom and technology industry. Then you have the OTTs, Facebook, Twitter, etc. You have the fintechs, the FSIs who are playing in the tech space. Then the OEMs who manufacture the equipment, radio stuff, and co that we use, the Huawei's, Nokia's, Alcatels of this world. So that gives you the broad kind of swath of how this land lies. And it is anything that affects this whole ecosystem, you know, affects whatever application you want to put on top. For example, the regulator typically plays a big role here. And in terms of, I think Usora has already mentioned something there. Things like digital identity, we have people like Verify Me already playing in this space. We've got a lot of initiatives already taking off in this area. WACREN tries to do student identity, etc. But the enabling environment, the enabling laws are still not up to speed with what is required to ensure that people are safe in cyberspace to really feel free to explore that area. And what are the 4 areas? I think 4 or 5 areas come to mind that I would say we need to fix to unlock the fintech penetration, to make it better. Whatever we see now is still scratching the surface. The first is connectivity, because I mean, you say fintech, there's, as I mentioned, technology is sitting on top of some communication infrastructure, and at the base of that is the connectivity. Happily, we now have people like Google and Equiano bringing more subsea capacity to Nigeria. Equiano landing in a few days' time, Facebook to Africa sometime next year, and data centers springing up left, right, and center in Nigeria. However, the middle mile and the last mile, really connecting the last consumer, we still have a $36 billion gap there because of the shortage of fiber, shortage of towers, shortage of, and policy issues around right of way, around multiple taxation, around capital, etc. So that's connectivity. Connectivity on its own is something that is one of the bottlenecks. There are very many states where you cannot really connect to the internet easily. And yes, you can use 2G to try and do mobile money and co. But as you all know, that creates a very limited way of interaction with the end user. The policies, as Usoro will know, there are things like the Critical National Infrastructure Policy that has been on the table for years now to enable people deploy distributed digital infrastructure in any part of this country without fear that it will be vandalized, it will be destroyed, and no recompense or payment to the owners of that. That is something that's happening. There are fiber cuts every day. Some of the outages that you see in Nigeria are not actually caused by negligence of the operators, but by environmental issues that are not helped by the policies that we have in place. People see the owners of this infrastructure as private businessmen and as a target for revenue collectors, and all kinds of people go after them. Sometimes they even bring down a service. They have service impacting activities without thinking of the wider implication. Another big one is the right of way. For you to lay fiber in Nigeria, even though the Minister of Communication and Digital Economy and the broadband plan has clearly stated that, the right of way is a big impediment, and this is issued by the state governors. We still don't have more than 6 or 7 states who have agreed to implement the NNBP the way it is designed. This is supposed to help drive broadband penetration. Now, when you drive broadband penetration, every other thing sits on top of that. We have power issues. As you all know, power is 50% of the capex of infrastructure, digital infrastructure, and almost roughly the same in terms of the OPEX. And with what diesel is doing in the market now, with no national grid, you are left with very few options in terms of how you can optimize your cost and make the businesses profitable. Then capital, attracting capital, early stage, scaling capital and all that. People look at the country, look at country risk, look at ease of doing business, and take decisions. So yes, we know that we've attracted a lot of money, I think 800 million into this space in the last year. But if you compare, if you look at what Kenya with its small market is attracting, we're actually not punching at our weight. And most of the issues have to do with the way investors perceive the risk in the market. And these things have to be fixed so that we can actually go faster. So if you look at, in summary, enabling environment, capital, power, policy, and connectivity are the underpinning issues that we need to fix in the digital infrastructure space so that these digital services can run seamlessly on top of them, and we can take advantage of the global technology trends like blockchain, IoT, cybersecurity, cloud, and AI. I know what I mean. Some companies were doing very well in Nigeria. Just to touch on the mobility of talent that Usoro talked about. This company, I mean, you all know them. I think they were doing very well in the cryptocurrency area until the regulation changed. And guess what? They just moved to Europe. They still exist. So there are certain things that we need to all agree on, both the regulators, the private sector, to understand that there are certain things that you cannot stop anymore. These are mega trends. They are happening. While we need to be careful about how we adopt them, but we really need to jump on top of the trend because it's a huge industry. It's going to help the country beat the poverty crisis, and it's going to create jobs and give access to lifestyle and improve the quality of life for Nigerians. So in a way, these are life-enhancing technologies that should not actually be stifled. I think I'll stop there for now at my introductory remarks. Bring that back to you.
Thank you so much, Mr. Abu. That was certainly very enlightening. Right. I'll just pick up from a number of the things that you mentioned in your presentation. Now, for the benefit of our audience, can you just, so when we look at the fintech industry, in promoting the fintech industry, what is and I know Mr. Usoro alluded to the fact that we're talking about digital infrastructure. So what are the core infrastructure that we require in place in Nigeria to ensure that we have a solid bedrock on which the fintech industry can thrive? I think you're on mute, Mr. Abu.
Apologies, I missed your question.
Yeah, I was saying that, yes, I was saying that, when we look at the fintech industry as a whole, Mr. Usoro made reference to the fact that, what we really need is digital infrastructure. So for the benefit of the audience, can you, what's the key, what do we refer to as digital infrastructure? What are the key, bedrock that we require that the fintech industry as a whole can thrive and can build upon?
Okay, thank you. Digital infrastructure will be infrastructure that enables digital services, okay? And things around connectivity, anything. So digital infrastructure, you will need connectivity, so that is one. You need some kind of connectivity solution, and that is, then you need storage, computing. Okay, so typically, if I would just say connectivity, you need data centers and you need power, So those are the things that you need to actually layer any service on top. If you have if you want to deliver any service today, it is sitting somewhere. If you say you go to the internet and let's say you take you're taking service from Paystack or whatever, they will have to have some server or rack sitting somewhere, typically in a data center, connected to several payment systems. They will not be on their own. They will need access to the cloud, very high speed connectivity, and they will need constant power. Typically, you find them sitting in a data center. So we need solid data centers, and that is, we are beginning to see people develop that sector very well. You need distributed power assets, for the same data centers, for tower companies, and for repeater stations everywhere. You need connectivity. For you to get to the internet, you need very high-speed connectivity, good quality, reliable, and that means typically fiber assets, okay? And those are I think generally speaking, that's what's called digital infrastructure hardware. The software is not part of that. It's another stack in the whole technology stack to the top. But for the purpose of my own presentation, what I meant when I talked about digital infrastructure was a hardcore infrastructure that supports services and top.
Thank you so much. And just riding on the back of that again, in your opinion, what do you think should be the nature and the channel for appropriate investments into infrastructure? Should it be private? Should it be public? Should it be a combination of the public and private sector that can bring in the kind of investments that we need in infrastructure?
Okay. I think the gap, depending on who you listen to, the infrastructure gap in Nigeria is put at, the digital infrastructure gap in Nigeria is put at $36 billion. Now, if you took our revenues as a country, if you took all our oil revenues in a year, okay, and you didn't spend it on anything else, and you put all of them into this space, in 10 years, you still will not be able to close that gap. So you can see that it would need a lot of private sector involvement in it. The government cannot really do it alone. What the government can do is provide the policy framework that makes investment into that area attractive. A lot of work has gone into that, actually. There's a lot of outlines in the broadband plan. There is also something in the Investment Promotion Council. There are quite a lot of incentives trying to tell people to come into the country and go. But sometimes we have certain government agencies who also, I would say, work against themselves at cross purposes with themselves. So in a nutshell, the kind of funds that we need to grow our digital infrastructure, to actually close this gap, is not going to come from government alone, not more than 10–15%. Recently, there was a 15 trillion Naira infrastructure fund that was launched by the CBN. But typically, again, when Nigeria is talking about infrastructure, we talk about roads and bridges and forget the part that relates to communication and digital infrastructure. I believe that maybe when the implementation of that fund takes off in full swing, we in the telecom and technology area will be able to take advantage of that fund. But as of today, most of the funding that is required will have to come from outside by private efforts.
Thank you so much. Mr. Usoro, I'll come over to you. Now, how would you, looking at fintech companies in Nigeria, what are the key challenges that are facing fintech companies as a whole? We understand the fact that the landscape has developed rapidly over the last couple of years, but then there's still a lot of ground to cover. So what would you say are the key challenges faced by fintech companies today?
I'll start from the obvious, and I alluded to it. One is talent, and I alluded to the fact that there's a lot of challenge now attracting and retaining the right talent, and that's now, and maybe in the immediate future we still see that might just continuously be a problem. Although we need to, as fintech companies, we need to be more creative on how we deal with it, recognizing the fact that there is talent mobility and creating policies that would allow talent wherever they are to work from us, whether it's from Canada or from the UK, and not expect that people have to be physically present in Nigeria. The second is the fact that, and it's traditional, that innovation always, most times, is ahead of regulation. Most times, either you need to innovate outside the framework of regulation that does not yet exist. And regulation most times would now have to play catch up. Or you're also trying to innovate within the narrow definition or restrictions that regulation might present. So that itself, I think, is also something we need to work on, ensuring that we're constantly improving the capacity of people, policymakers, to be able to understand and recognize where opportunity is and how they can create broad framework that would allow innovation to happen. I think for me, those are the major two things that I see as challenges: talent, and obviously the fact that we need to constantly improve regulation.
Yeah, thanks a lot. So sticking to that point on regulation, and so how, I mean, looking at the progress that we've made so far, would you say overall that regulation has helped to develop this space, or has been a hindrance to this space? And in terms of what's next we need to do, I mean, are we talking about, do we need more policies in place, or is it sort of emphasizing the implementation of those policies? And what will be your suggestions to how we can actually get effective implementation of some of the policies that we have in place?
There's been lots of improvement, and in financial services, I easily would cite maybe 2 or 3. Maybe firstly is our 3-tier KYC framework has been, in my opinion, very revolutionary. The fact that we're willing to, policies able to allow people with very basic KYC to carry out basic transactions, and that's been very helpful. We've also seen lots of progress when it comes to agent banking. That also has been helped largely by policy. And the fact that at a certain point, even our regulators were willing to take a step back and say, let's see how this place evolves, and then we know how to put the broad framework. And I think that already is happening. The fact today that we already have a sandbox, there's a sandbox from the CBN that allows people to carry out innovation in a very safe environment, and then you can now put this out in public. So overall, it's been very progressive.
Thanks very much. Still on that point of being very progressive, are there some specific lessons? I mean, obviously there are different countries and different markets that have had successes in various areas, looking at the fintech space. Are there specific lessons that we can learn from some of the, remarkable successes that have been made in other companies, in other countries? We talked about Kenya, we see what's happening in India, Singapore, and some of all this, other, developing countries. Are there things that, as Nigeria, we can, easily learn from them, and, we can translate to, greater levels of results in our own space?
So yeah, I said whereas Kenya grabs all the headline. Personally, the country where I see is a very mature market when it comes to payment is China. And China, for reasons that they've been able to transform their retail payment space. They've been able to use mobile payment to reduce the friction of cash. In Kenya, yes, there is a lot of progress that have been made with P2P. But when you look at retail payment, there's still a lot of transactions that are cash dominated. And I think China leads in that area. And there's a lot and lots that we can learn with how China has leapfrogged the card rails, from cash, leapfrogged the card rails and went straight into mobile payment. And also they've been able to transform their cash payment more effectively.
Thanks a lot. Mr. Abu, I'll come over to you now. According to Report Linker, over 90% of Nigeria's data is still hosted abroad, and many government agencies in Nigeria still host their data outside the country. What are we missing here? We have, data centers springing up in Nigeria. We have developments, in country. How can we improve the scalability of data centers in Nigeria? And what are the challenges with our data centers, if there are any you can speak to? Because we need to ultimately get to the point where we can host data within the resources that we have in country.
The issue of data sovereignty, is a touchy one. There are so many opinions around it, and so on one end you have globalization, the fact that you are taking services from a company that is located anywhere. Okay, if you are on Facebook, for example, you have already given all your information to a company that's not regulated by a Nigerian law. Okay, in the strict sense of it, and they have your information. You could be anybody, you could even be a government official, so they have all that information. Same thing with all the big tech giants, and none of them is African, none of them is even Nigerian. So if you want to look at it from their end, the OTTs will ask you how many countries. In Nigeria, in Africa, you have 52, 53 countries. So are they going to take licenses in 50-something countries to operate? Are they going to set up offices in every place? So what's the essence of having cyberspace? That's one argument. On the other hand, a country will say, my data is proprietary to me. I don't want you taking data or having access to the data of important people, sensitive information, why should the information that is for my citizens that you can use it for anything, you know? So there's that tension here and there. I think that from a business perspective, striking a balance, there are certain things that you cannot really legislate when it comes to taking, when you want to go global, because we also have benefits. We also want Nigerian unicorns to offer services to anybody anywhere in the world, and we don't want them to fall foul of overbearing regulation. You will now become, you'll be unable to scale into several countries if you don't have a uniform way of dealing with that. There are a couple of, there are many agencies now, you know, who are trying to coordinate that across the world. ICNIP, you know, and all that. They try and put the frameworks to make sure that they manage this, but it's still early yet, because you remember that most of our regulators and governments in sub-Saharan Africa are playing catch up, and even in Europe, where you have people who have good governance systems, the rate at which fintech and tech companies, you know, mushroomed over the past 20 years, nobody has actually been able to keep up with them. We find out that even in North America, where you traditionally say this is the tech capital of the world, they are not really, in terms of regulation, on top of every single aspect of this. I mean, it pops up every now and then, here and there, tensions between the tech giants and the government. It happened with Facebook, it happened with Twitter, it happened with even Microsoft, you know. So I think it's a reality that I wouldn't offer my personal opinion, but I think it's a reality that we all have to deal with, in the sense that change has come upon us. I think we're going through the change process. A lot of people are afraid of what's going to happen tomorrow if the tech giants go rogue. You know, how do you have a sovereign country that a tech giant, a company, can maybe have more data, more flexibility, and more power than? So it's a matter of, there are certain things that we'll have to give eventually. I know that we have to regulate, we have to control, but we also have to allow technology to evolve in ways that help us. For example, if you look at the agri policy of Nigeria now, Usoro mentioned something around it, and I just want to expatiate a little bit. You've got maybe 70 million people in that space. You know, how are you going to manage that data? That's just the people. Then you now talk about crop information, land information, fertilizers, seeds, all the inputs, the agri value chain. And how are you going to manage that without big data and analytics? And if you say all the information must sit here, there are many companies who are doing great things around the world who are not going to come here. They are not going to leave their country and come and stay here because of that. So that's one. But back to data centers, I think that under the current NIDA regulations, under the NDPR and co, there's still room for data. I mean, there's no problem for the investment case of data centers as of today in Nigeria.
Thank you so much. Mr. Usoro, now looking at the direction in which the digital economy is going, what should be the ideal relationship between banks, between fintechs and telcos, and how should these three players, you know, be interacting to ensure that you know, there is a there's a drive towards the overall development of the digital space?
I mean, it's simply through collaboration. The competition is not between banks. It's not between banks and non-bank institutions. The competition is cash. And regardless of all that has happened in the last few years in terms of driving financial service penetration. The numbers are still out there. Reality is still that there's still 50% of people that are financially excluded. Cash still dominates. And how we can all collaborate together to drive transformation and remove the friction in cash payments for us should be really, that should be the objective. So it's really around collaboration to face the common enemy, which is all the friction we see in cash.
Yeah, thank you. I'll take a quick question from the audience. And Mr. Osoro, I think this is for you. Besides having a higher database of customers, what other competitive advantages would accrue to telcos offering fintech services?
I think a number of it is know-how. The fact that across most of the footprint where a lot of telecommunication companies have offered financial services, they've been able to understand how to offer at scale, how to be able to serve the underserved customers. So there's a lot of know-how that they bring beyond the fact that that they have an existing base.
Right. So essentially is another phase of providing solutions to the same set of customers, ultimately to meet their needs one way or the other in a different way than they've been used to. Thank you for that. Mr. Abu, let's talk about the Google Equiano. Like you alluded earlier to the fact that it's scheduled to land in Nigeria before the end of this week. Now, what should we expect this time from the Equiano vis-a-vis the other submarine cables that have been landed in Nigeria? What is the real upside and what is the downside, if any, of this? And how is this going to shape the existing business model going forward?
Okay. First and foremost, the fact that you have a company like Google, owning its own infrastructure and landing it into the country has two things. First, from an investment perspective, it's positive that a company of that reputation, has ticked Nigeria as a decent landing place. So typically it ticks that box that Nigeria is an investment destination. In terms of capacity, we do have significant capacity today from the existing cables, but this is bringing in what I'll call latest technology. The fiber is of higher capacity. It's newer technology. But that behind Google, what Google's real strength is analytical power. The kind of company they are. They are not the regular company. So on top of bringing in that, I suppose and I think that they are going to help enable companies that are playing in this space already to do last mile distribution, because they are not just going to bring their cable and leave it at the shore. I think this is the beginning. This is just the first stage of the play to bring wholesale capacity to the shore, and of course help with taking it inland, where the real challenge in Africa is. So step by step, the infrastructure, the type of infrastructure that we need in Africa is being built. If you look at the global connectivity maps, you see the kind of capacity that exists between places like Europe and North America and Asia and Europe. They are like expressways, while ours is like a footpath. So let's first get the expressway, then we will now take it inland. So that's one advantage I see in terms of what's happening. Of course, from a pricing perspective, it goes without saying that the prices for internet is going to come down significantly. For a continent that has a lot of poor people who struggle with affordability, that's good news. You know, we don't have to pay so much for connectivity anymore. Google, again, typically, Google's business model is not selling connectivity. They typically play a different game. So I foresee a situation where prices, at least in terms of pricing for wholesale traffic, is going to significantly be impacted when they light up that file.
Thank you so much. So I think the big difference here is that I hear you say is that they're not just landing their cable on the shore, they are working conscientiously to ensure that it actually gets to you know, the last mile. Now, if we take that thought in conjunction with the, I mean, we expect the introduction of 5G network, you know, how will 5G impact, you know, Nigerian technology landscape? And there's also a question here that says that what is the expected percentage in data cost as we tend towards 5G implementation? So I guess if we look at that vis-a-vis the fact that I mean, we now have Google Equiano, what sort of change do we expect to happen in the landscape and also where cost is concerned?
Okay, so when we say costs will go down, of course, it's not just going to drop like a switch. It's not an on and off switch. It's just going to gradually, you know, drop. And there are other forces, there are other market forces around that, which, I mean, it's just demand and supply. Since there's a lot of supply now, we expect the price to go down. The exact percentage, I mean, is left to be seen, you know, over time. Remember that there are other things that affect pricing, not just bringing the capacity in. And you mentioned 5G. Yes, 5G. I don't really get the question. What was your question about 5G?
The question here was, what will be the expected change in data cost as we move towards 5G implementation?
Okay. Now, the way data is priced I don't think it has to do with the technology that you're using to deliver it. You know, it depends on what you do, you know. So 5G, as you know, is just typically about speed. It's about increased speed, you know, from 2G to 3G to 4G to 5G. It's all about the user experience, being able to have reduced latency and faster speeds of internet. However, your consumption depends on what you do, with it. The use cases for 5G typically, I haven't seen any for Nigeria or Africa yet, you know, but because as we speak today, I think just about 17% of the country is covered with 4G, you know, so 5G is still futuristic. But if we were able to look at its impact on pricing, I would say it will be minimal, in the sense that you're likely to use more if you're actually going to use 5G for anything at all, probably for manufacturing processes or something. You're going to use a whole lot more data, you know, and therefore your costs will not be, it won't be the cost of the data that you'll be worried about, frankly. What you're worried about is the quality. That's what you're looking for. The kind of 5G is not for retail. You're not going to want to watch a movie at home, and you're looking for 5G connectivity. 4G, what we have today, the speed is fine enough for what the regular consumer uses. 5G, by its own, the way it's configured, I mean, I think you're talking about autonomous vehicles, you're talking about things like that. The people who are running those kind of businesses are not going to be worried and quibbling about whether you're paying 100 Naira for 1 gig. So I think the issue of cost and 5G, they're really not really correlated.
Thank you so much. That's very helpful. Mr. Usoro, I'm going to take 2 questions for you together. The first one, I know in your presentation you alluded to basically the various subsectors within the fintech space. So what are the significant opportunities that you see in the immediate future regarding within the fintech space? Is there any of those subsectors that sort of can provide a quantum leap if invested in, if lots of resources are put in that direction? And the second question, can you provide an idea of how big the fintech opportunity is within Nigeria? In your presentation, you point to an estimated fintech revenues of 543 million USD in 2022.
So the broad segment, where I think there's still huge opportunity. I still go back to the fact that we need to see how we can transform cash payment, and transforming cash payment in retail is where I see the opportunity. And so that's for me, it's big. Lending, obviously, the fact that penetration of lending is still at very low, as much as maybe single digit. There's opportunity for us to leverage data, for fintech companies to leverage data to expand the pool of people that have access to credit. Insurance too, there's also huge opportunities there. Nigerians broadly still have very limited access to insurance services, or even where there is, we still need to be very creative and innovative around how we package and sell these services to customers. Across even West African countries, surprisingly, there are certain insurance packages that resonate more with people, and they have higher levels of adoption. So how we can be very creative in both the packaging and presenting and making insurance more relevant for our people, for me, presents huge opportunity. The second question, I think the number there was 2025, and there are lots of, it depends on how you slice and dice it, and what you put in the pool. But there are different estimates out there, and a number of them estimate that the current revenues of fintech could grow by as much as 3 to 4x by 2025. I think you're on mute, Oyinda.
Thank you. That's very helpful. Now, another question from the audience for you, Mr. Usoro. What would you say the levels of smartphone penetration in Nigeria currently can support significant adoption of app-based financial services, or is USSD still more prominent?
There's still the prominence of USSD, but at times it's really more for convenience. While there is obviously very high penetration of smartphones, the kind of use cases that we see for USSD is not because of lack of smartphones, but because people see USSD as a convenient way of simply transacting. If I can go in and out with 2-3 steps, put in the PIN is more convenient for me than to open an app. And they both have their use cases. Ultimately, for us to be able to expose a rich suite of financial services to customers, you need to do that on a mobile app. But for simple use cases and very basic services, USSD, even on the smartphone, would just be as good.
Thank you. One more question for you. What's your take on digital currency and the central bank digital currency for the African continent as a whole?
It removes friction. Cash for me, it's a lot of friction, and takes away that friction. And secondly, as long as we can design it in a way that achieves convertibility, then we would be able to at least use that to drive trade across Africa. So promising.
Thank you. Right. So there is hope in that regard.
Yeah.
Okay, so I'll take one final question, and I would like both of you to weigh in on, and it's something that you both alluded to in your presentations, and is this issue on human capital. There's one of our clients who plays in this space. He says that his biggest competition is Canada. Because they train people and they're moving out in their droves to Canada. So we've spoken about so much opportunity within the landscape. So how do we, in real terms, how do we ensure that, we have the human capital that can actually drive this development? Because if we get to a point where, we don't have people, we don't have, developers, we don't have people to push these opportunities forward, then, we're going to be stuck as a nation. So we need this human resources. So how, in the practical terms, how can we ensure that we have a solid pipeline of people that are, being thrown into this space, who are being trained, who are being developed, and who are being, rolled out one way or the other? So maybe I'll start with Mr. Apu.
Okay, I like your story about Canada. Actually, was talking at a similar forum yesterday. This also came up, and I shared the story of an experience I had in my previous life, where a whole department, in the company I worked for, was lost to Canada, not to another company. The whole department of about 4 or 5 people in the function disappeared, to Canada. So that tells you, what's happening in the country. We've seen it with doctors, we've seen it everywhere. But frankly, if you are a Python programmer, Python is one language everywhere in the world, so you can go anywhere. It's a very mobile skill. If you know anything about AI, if you know anything about cybersecurity, if you are a blockchain expert, you can get a job anywhere in the world and you can move around. With the weak exchange rate that we have, you can imagine somebody who's earning hard currency and he has the opportunity of living in a place with good infrastructure. So that is a big challenge. And I think one of the other things is that the educational system, what I think is underpinning in terms of long term, is not just here. People are going to be moving around. Even India, with a lot of talent, they still struggle. But our educational system is not aligned with the reality today. We have this huge population that we all talk about, this young population. But every day we are actually looking for talent, and you have to sift through mountains of CVs to get someone who can actually do what you want. And the moment they're able to do that, because there are not many, they see the light and they can go. So what we need is to massify this talent. And it boils down to our educational policy. You have people who are in school now who are being prepared for jobs that no longer exist. The very way the world has changed now is that all the jobs that can be all the jobs that require high precision are already being automated. They have been taken over by robotics and artificial intelligence. But new jobs, higher level jobs are being created. And I don't think we are prepared for that. So it has to be addressed at policy level. What happens is that companies like our companies, we spend a lot of time converting young graduates and professionals into skilled professionals that we have. So that's the problem. We have people, but the skills are not there. Our university dons, our educational ministers and co need to take a good look at the curriculum. In my alma mater, we went through, I studied engineering. So we're trying to look at what is happening in the engineering department in our school that we left several years ago. It's the same syllabus, it's the same thing. It's the same thing. People, how can you, of course, a few changes here and there, but what you expect is that they should have upgraded all that today to make sure that people are able to have relevant skills when they are being taught. During the COVID pandemic, it was very glaring that we're not ready. All the public schools were unable to continue delivering educational content just because they didn't even have basic stuff like connectivity. They don't even have internet access. where they have internet access, the homes don't have internet access. So there was nothing. People just lost a year or two just sitting at home. Of course, you don't even want to go into the politics of ASU and all that. So the content, is not being delivered. The right content is not being delivered. The framework to create the workforce of the future, the workforce that will power this fourth industrial revolution in Nigeria, the framework is not in place yet. And that, I think, is what will solve the problem. Then I think we can learn from Rwanda. There are a couple of things that they've done very well. You have to have maybe a finishing school, for want of a better word, some kind of intermediate school that takes people who have already been trained in the old syllabus and convert them with short courses, into skilled professionals that deliver the type of expectation that that companies playing in this space can do. Today, you have virtual assistants who are working from anywhere in the world, and they can. So I don't have to be looking for the skill here again. So you can actually reverse it. The fact that Nigeria has this huge population and they are quite mobile and these skills are in demand everywhere is actually a huge opportunity also for private sector players to create that vehicle that can convert willing people. Andela did very well in that space before. There's an opportunity there, and there are use cases for that.
Thanks so much. So definitely there needs to be some form of private sector involvement in ensuring that the foundation is right. Mr. Usoro, can we have your take?
Yeah, I second broadly what he said. There really is a growing problem. The number of projects across most companies today that are already been impacted by the increasing brain drain. For me, the solution will be broadly, both what we can do at the macro level and what we can do at the company level. At the macro level, the various pressures that's forcing or creating a need for people to, as the popular phrase is, to leave the country. How do we address that? How do policymakers create a more attractive environment within Nigeria for people to want to stay? And there have been times in our country where there was almost a net increase in the number of people returning from the diaspora than people leaving. And we need to be able to create that kind of environment again, where people see that there's more opportunity within Nigeria for them to return to and invest in, rather than the other way around. And secondly, we look at the current pool. From the corporate level, the question still remains, and I think it's now a battle for talent. How can we retain? How can we attract and retain the kind of talent that we need? And how do we allow an environment where talent in a mobile form can still serve us? And I think companies need to, and I think I alluded to that, the fact that we need to be more creative in the kind of policies that we put in place that would allow people to work regardless of whatever jurisdiction that they are based. I think that for me is some of the immediate things that we can do. But broadly and ultimately, we need to start addressing some of the macro pressures, some of the macro issues that's creating the need for people to want to migrate.
Thank you so much. We'll have to draw a close here. Mr. Abu and Mr. Usoro, it's been a very enlightening session. And I'll just at this time hand over to Bumi Dayo Olaguju for the closing remarks. Thank you.
I think you're muted, Oyinda. Oyinda, you're on mute. You need to unmute.
Okay, can you hear
You're off again. You're off again, Oyinda.
Your mic is off, Oyinda. Now it's on.
Okay, can you hear me?
Yeah.
Apologies. Yeah, thank you. So thank you once again for the session. Thank you for sharing out of the wealth of your experience and your knowledge. And thank you also to our audience for participating and taking out time this afternoon to be with us. The webinar continues tomorrow, and we hope that you'll be able to join us for the sessions tomorrow. Have a good evening. Thank you.
Thank you. Bye.